It's been quite the recovery, KG, from, when you think about a little more than a month ago, and essentially what was a pain trade that you saw, the bearish sentiment, and now it feels like the bulls are back in control. Is that an accurate assessment?
Yeah, I would say for now, the bulls are back in control. They continue to gain ground on some of the losses that we've seen this year. And in fact, as you kind of talked about, we are up on the year so far, but we're not really at those February highs, but we are making some ground here. What's a little bit different about this bounce back than what we've seen in past recoveries is actually the participation that we've seen. It's not only just communication services and technology, and we'll talk about some of those news items, especially when you look at Nvidia and the semiconductor space, but you continue to see some outperformance when it comes to industrials, financials also doing fairly well here. So it's not only just a short covering type of rally, but this is maybe a little bit of optimism that the economic slowdown will not be as aggressive as what we priced in earlier because of this, the tariffs being reduced, especially between the U.S. and China, as well as maybe some of these other deals or announcements of potential deals actually being priced into the market. I think there's still a little bit of a question about valuations. When you're looking at forward multiples, they're still a little bit stretched. We'll talk about some earnings where you're still seeing companies really withdraw guidance or lower their guidance. And so it does make this market a little bit more expensive. But it seems like for now, the market's really kind of discounting that and trying to put dollars to work, selling out of treasuries, getting into equities here. This is actually a really decent hold. And for the bears, you really need to have some economic, slowing type of data to really try to knock this market down. It seems like for now, the bulls are actually a little bit optimistic about the latter half of this year.
Yeah, it makes sense. And, I love the point that you made about the performance and financials, because at the beginning of this year, there was this expectation that you would see stronger performance with the financials, especially with the expectation that we'd see more deals, more IPOs, et cetera. So it's interesting to see some of the recovery there. From a technical standpoint, what are you watching out for when you think about, sustained momentum from here?
Yeah, from a technical standpoint, what we want to really be able to do is accomplish that 5,900 level. I mean, we've already hit some pretty key areas of resistance that has been able to kind of, once again, kind of show that we have some strength into this market. But from a technical standpoint, obviously, we want to get back to those all-time highs. And we really want to try to get up to around that 5950, 5960-ish area here. That will kind of get us to the next leg of this upside move. From a technical standpoint, though, if you're kind of looking at it and you're a bull in this market, you'd like to come back, kind of retest some of these levels to the downside here, really confirm that some buyers are really going to step in and then move higher instead of having this really outstretched move to the upside here. Because at the end of the day, especially if you're looking at the last couple of trading sessions, the price action looks good, Diane, but the volume is a little bit light. And for mega bulls out there, you'd like to see the volume really kind of complement the price action. We just don't have that right now. But once again, bears really don't have a leg to stand on until we actually get some economic data that does show that there's some cracking into the marketplace here. And we just don't have that. And we probably won't have that for another 2 or 3 months, just based on the lag time that it's going to take in order for a lot of this tariff policy to be reflected in the market. What I feel is also kind of interesting for Q2 that we have to keep on the radar here. Because we've lowered those tariffs, do we actually see a reacceleration of imports coming into the United States? And do we have the same type of scenario that we had in Q1, which we had so many imports and not as much consumption and a buildup in inventory that it created a negative GDP print? We don't want to see a Q2 negative GDP print. That probably would give bears a little bit more confidence that they probably can knock this thing down. But for now, all systems go. Technically, we're looking pretty good.
That's a great point about, Q2, although, you would think based on some of the economic data that is starting to come in and then where we're going with regard to trade deals, that it might be the economy may be shaping up better than we saw for Q1. Let me ask you this. The point about volume, though, is some of that just because of the time of year that it is?
Oh, we're not at that summertime volume slump that we usually see. That usually actually comes in around the first week or second week of June. Right now, I think it's, once again, the lack of There's probably some short covering that took place. We had this capitulation type of week back in early April, maybe mid-April or so, and then you started seeing some really aggressive volume, but it's starting to kind of wane over time here. So I think right now it's kind of a wait and see. We're following the price action, but you might not be too convinced that these levels are going to hold for now. And once again, maybe the anticipation of a pullback in the market is being priced in for a lot of traders out there, and that's where you could see maybe some light volume, less commitment to putting dollars to work right now, I think is really that trend. But we're a little bit too early right now for the vol crush type of summer event and the volume crush summer event. We still got about maybe another 6 weeks or so until that actually really comes into effect.
So let me ask you, some investors are obviously putting dollars to work in Nvidia. It's back in the $3 trillion market cap club. So, good signal, obviously, for Nvidia. What are you watching there?
Yeah, obviously it's the news headlines. Nvidia probably got a little bit oversold, especially when you're looking at that $88, $89-ish level. You started seeing some buyers really step in, but you're starting to see the news flow really actually impact the company. And Donald Trump's trip to the Middle East is really showing some promising signs for Nvidia and their ability to actually expand some of their GPU sales across the globe here. And we did see an announcement yesterday where they're going to ship over around 18,000 Blackwell AI chips to Saudi Arabia. This is going to be the first major order that we see coming out of the United States here, and obviously those are very high profitability or high margin type of products here, and so that's going to be a tailwind for them in the near term. That gives you the fundamental story. I think the question mark is going to be the earnings announcement that we're going to get on the 28th of May. What does their guidance look like moving forward? We have been really kind of accustomed to seeing a guidance beat of around $2 to $3 billion on the top line when it comes to revenue. Is that going to be the same type of situation this quarter going around this quarter and moving forward here? I'm not sure if that's going to be likely, but the street is probably worried about more of a deceleration or maybe a slowing of demand rather than the acceleration of growth, because the year-over-year comps are going to be fairly hard for Nvidia. So a nice breakout to the upside. It has broken out of this bear flag channel that we've seen develop here. You want to see it maintain above that 130 level and obviously continue to move higher here. And then you're also seeing some of the other semiconductor companies complement this move as well. AMD, the big headline is Nvidia yesterday. AMD also inked a deal with the Saudis as well. We did see some positive movement to the upside. You look at Supermicro or SMCI and the SMH, the Philly SOX index, semiconductors really did well yesterday. So they have the fundamental story right now to really push prices higher. It's not just technical.
Yeah, great point about both the fundamental and the technical story. NVIDIA and AMD, though, obviously not positive for the year yet. What are the levels? So you mentioned the level you're watching in NVIDIA. AMD, what level are you watching for next?
Yeah, for AMD, I mean, this one has been a little bit of a tough one to really try to break out to the upside. Anytime that we've had these false breakouts, we've seen failures. But this one is kind of turning into maybe a potential, I want to say a cup and handle, but at least a cup pattern here with that neckline sitting at around $115. What you would like to see is actually a breakout above around 123, 125 for AMD. Once again, complementing that with large volume. Now, the volume is actually being reflected in AMD for two reasons. One, new optimism, new investors kind of coming in. Valuations are a little bit cheap compared to some of the other peers within this space. And then also AMD was actually a pretty decent short for a lot of traders as well. So you're seeing some short covering taking place. Volume is increasing as price is advancing to the upside. That's exactly the environment or the components that you really want to see for a continued trend. Let's see if it's going to be able to hold. But once again, I would say 120, 123, 125-ish would be kind of that confirmation breakout there. And hopefully they're able to kind of see some follow through over the next couple of weeks and months.
Okay, and then one stock that's out of this sector and the retail sector that we're paying attention to this morning, American Eagle, shares under heavy pressure right now after withdrawing guidance here. To me, this signals that, the consumer is not completely out of the woods, or does this seem to be just an American Eagle problem?
No, this is definitely a retail problem that you are seeing. So American Eagle, actually, before withdrawing their guidance today, they did caution for a soft guide for this quarter a couple of weeks ago because they did see a pretty decent drop off when it came to sales in February. And so this is something that is not only just specific to them. If you look at stocks like a Macy's or you look at some of the other retailers within this space, it has been slowing here. Consumers have been really focusing on really niche type of products, and that's really what they talk about. It's not so much the macroeconomic uncertainty. This is not really a pull on guidance because of the tariff debacle that's kind of gone on over the last couple of months here. This is actually mismanagement of inventory. They did take a chance on certain products. It seems like that did not work out. They had to discount a fair amount of products here as well. They did take an operating loss of around $75 million, a charge of $75 million because of the excess spring and summer inventory. And they're going to have to price those things down, and that's going to eat into margins. So this is not outside of the ordinary. There's a lot of stocks within this retail clothing sector that look the same as American Eagle here, and unfortunately, you're seeing it get hit in the pre-market session.
Yeah, one of the things that I noticed about them, was that is something that we expected to hear from different retailers, that that they would have more inventory. They were bringing more inventory to essentially get in front of tariffs. I actually went to a store yesterday, and one of the things they talked to me about was, because there were some items I had my eye on, they were like, you might want to get it now because I don't know what we're ordering next, because we're just ordering from our factories in China, and we're just taking whatever. So I found that fascinating, that there clearly is this pattern of retailers trying to get in front of the tariffs to a certain degree, but at least for American Eagle, it's not playing out so well. Any final thoughts you want to leave us with, KG?
Look, I mean, if you ever go to a retailer, they're always going to tell you to buy now. It's kind of like going fishing and you go to a bait shop. They're not going to tell you that the fishing sucks at the area that you're fishing in, right? So at the end of the day, they're going to tell you what they want to tell you in order to try to push sales through. This, once again, looks more like a situation of mismanagement of inventory and getting the wrong product that the consumer wants, rather than tariff impact at the moment. And so they wouldn't, if they had a concern about tariffs and inventories being drawn down to an aggressive rate where they're not able to backfill and try to push top line growth, they wouldn't be marking down their current inventories. This is just mismanagement, and this happens in cycles. Target's another good company to kind of check out for this. 2 years ago, they had the same situation. They loaded up on the wrong things, back to school, and they just were not able to get that inventory through. And it takes a couple of quarters in order for them to kind of right the ship. That's probably where you're seeing American Eagle really kind of start off right now. They're probably trying to right the ship, really bring inventories to a very low level, and then backfill those as they see fit.
Okay, all right. And KG, before I let you go, I know you mentioned 5,900 for the S&P 500 to the upside. Is that the target to the upside, and what's your target to the downside? Yeah,
so 5,900, 5,905 is going to be a key area of resistance once the equity market opens. If you're looking at today, the flows itself, 5,940 to the upside is looking like a major area of resistance. To the downside, 5,815. This is probably the first day that we're starting to see a little bit more, compression when it comes to these levels, and that's exactly what we saw yesterday. Was a range bound type of trade, a little bit of an inch to the upside here, but nothing that was a straight up trend day to the upside. And that's kind of the environment that once again kind of favors the bulls in this situation, but also probably signifies that consolidation might be on the horizon here before we try to push higher.
All right, potential consolidation coming. That's our Kevin Green, Senior Markets Correspondent, Schwab Network. Thanks, KG.